Hi, and welcome back for another episode of IR in Focus. I'm your host, Carmen Lilly. In the next 20 minutes, we'll be diving into some of the most critical aspects facing investor relation groups today, broker relationships and managing communication. Joining me for this discussion is Melissa Otto, head of TMT research at Visible Alpha. She spent 20 plus years as an equity analyst and portfolio manager. At TIAA/Nuveen, Melissa specialized in covering global technology and consumer stocks and the Pan-Asia region. She also managed one of Fidelity's equity research teams as a director of research. In addition to her equity investing career, Melissa worked directly with software engineering teams at Bloomberg, Microsoft, and MSCI, building cloud-based solutions to centralize and aggregate critical investment data for investors. Melissa studied Japanese at Harvard University, received her master's in economics from Brandeis University, and an MS degree from University of Pennsylvania, and is also a CFA charter holder. She is also certified in Azure Fundamentals and Agile Project Management. And welcome, Melissa.
It's great to be here. Thank you so much for having me.
Yeah, it's great to have you with us today for this discussion. I'm super excited about it, so let's dig right in. To start, we know broker relationships have always been a fundamental part of investor relations, but we also know these relationships are evolving or transforming given regulations or whether that be advancing technology and just an overall increased transparency in the financial markets. So I'd love to start there by hearing your perspective on this. So how do you see the role of brokers changing in today's digital information age? And what sort of impact does this have on investor relations?
Indeed, it's an important question. Brokers are really the heart and soul of the earnings models that feed into consensus estimates. And so all of the brokers that assemble these models, that cover companies, they provide on the ground engagement with the companies and provide the forecasts that ultimately feed into what the market is expecting. And having a variety of different perspectives on that is critical for a vibrant consensus analysis. So understanding who are the bears, who are the bulls, and being able to provide that outlook gives us a real snapshot into what's actually priced into a particular stock or a series of stocks in the market.
With that in mind, so as I alluded to in the intro, various regulations have created a landscape where transparency and accountability and compliance are really central to those broker relationships. Because as you mentioned, they're a really integral part to understanding the company. With that in mind, what sort of strategies do you recommend for investor relations professionals to help build those relationships with brokers?
First and foremost, it's critical to understand the company's business model, what the company does, what is driving its earnings growth, its outlook, what its overall positioning is in the marketplace. And I think to be able to have a good conversation with not only the sell side analyst that covers the stock, but also with the IR professional to facilitate that engagement so that understanding, okay, here, if the consensus estimate is expecting $1 a share, what actually is feeding into that? And then being able to loop it back and say, okay, well, based on my analysis, my engagements with the company, with competitors, with the sell side, I have a different perspective and I'm able to see where my particular estimates and analysis are either above or below that.
Mm-hmm. So are you saying then it's really important for like investor relations managers to be connecting, maybe not on a daily basis, but on a frequent basis just to understand what's going into their models?
In terms of engagement with the sell side, one of the most powerful things for a sell side analyst to provide the market is their view. And so as an IR manager, you need to know who is providing which view and what those assumptions are that are in that model. So there may be 10 analysts covering the stock. They will have a variety of ways of looking at a company, modeling it, and providing those assumptions. And the IR manager can really be much better equipped to answer investor questions by essentially having a good understanding of what those particular estimates are and what the assumptions are that are embedded in those models.
Right. So it comes down to really building that relationship and understanding fundamentally what is going into those models, because as you're saying, like those brokers really are kind of another like mouthpiece for the company. And I know companies love good, robust analyst coverage, but sometimes I would have to say more isn't always necessarily better. You definitely want healthy coverage. You definitely want a handful of analysts. But in terms of, I'm an investor relations professional, I have a handful of analysts. What are some good, how do I tell as an investor relations professional, what are my good analysts? What sort of indicators should IR teams like kind of look for when assessing the value provided by those brokers?
I think analysts that are keeping their models up to date, that are providing comprehensive, detailed quarterly estimates as well as annual estimates, combined with real clear assumptions around the growth rates, around the percentages in terms of what the skew of the business will evolve into, and what the pacing of certain product categories and margins will look like. These types of details are very important in order to engage with not only the buy side, but to provide a very accurate snapshot in terms of what the sell side analyst believes the company can do, and also to have that engagement in the marketplace with the IR professional as well as the investment community.
Yeah, I like that point, being very like proactive and gathering that information around your brokers and how often they actually are issuing estimates and updates around your company. And so kind of like extending this a little bit, do you have any sort of tips or best practices when it comes for managing those multiple broker and investor relationships?
Well, I'm going to be biased here. I think one of the best solutions out there is going to be the Visible Alpha platform, where at an IR professional's fingertips, they can see all of the sell side analysts that are covering their stock. If they give data to Visible Alpha, see all of the filings, the actual data historically, as well as the models for each of the companies, either on the platform or they can actually dig into the platform and pull out the Excel model that the analyst actually maintains. And so I think this really equipped the IR professional with a lot of data to really facilitate those discussions with the investment community. In addition, it also aggregates the data and gives the consensus number, as well as the ability to unbundle that consensus number. So if there are 10 analysts covering the stock and say the consensus number is $1, they can see, is it 80 cents to $1.10, for example, and it's skewed to $1? Or is it a much wider range, say 50 cents to $1.50, and $1 happens to be in the middle? So, I think that can tell the IR professional a lot about how their stock is being debated in the marketplace. It can also contribute to stock volatility, so it can help explain why the stock may be behaving the way that it is.
I will say there is no shame in backing products that you absolutely love. I love data. I love talking about like what the data is telling us, and absolutely agree with you on that. Just having easy access to that critical data in order to enable conversations, enable to make decisions around how you are communicating with investors definitely is something I encourage all my listeners to explore. Like, what tools are making your life easier? In terms of how companies and IR programs can use broker feedback and insights, how could they, let me rephrase that, sorry. So how can companies use any sort of broker feedback and insights to refine their investor messaging. So we've talked a little bit about making sure you're managing that relationship, making sure you know what they're talking about. But in terms of closing that feedback loop, how would an IR program really use broker feedback to refine their investor messaging?
One of the most powerful features of the Visible Alpha platform is actually our revisions functionality, where we can actually see almost in real time what is happening to the consensus numbers. And if they're moving up, if they're moving down, and if there's a series of revisions that have been coming into the pipeline and what's actually driving that. That is a very useful bit of feedback for an IR professional, because what can actually start to creep into their stock is an assumption around what the key drivers are and what those numbers should look like. And sometimes those can get very out of whack or very aggressive or very bearish. And what the revisions tool enables is for the IR professional to actually see how a particular analyst or group of analysts are revising up or revising down certain dimensions of their earnings model. And that can provide a lot of direction in terms of what the overall view is on the business and where it's going.
Right. And then on that point, I like to pull in that thread just a little bit and just pivoting slightly to investor messaging and communications. So you cover a really interesting industry, interesting generally for your average, like non-financial person, and also interesting because it's really driving a bulk of the S&P 500. I believe most listeners were probably tuned into the Magnificent Seven's earnings call, including NVIDIA's earnings call, which happened last month on August 28th. So pulling on that thread in terms of communication, messaging, and thinking about your earnings call. So we also at NVIDIA posted in terms of beating consensus expectations for EPS and revenue. But then we saw the market reaction to that. Share price dropped, I think, around 6% post earnings. So we'd love to get your thoughts here. What could be, when we think about market reaction and we think about messaging communication, are there any sort of lessons learned for IROs in this space?
The consensus is very important in terms of understanding coming into the quarter what the market is expecting, number one, and number two, what the market is expecting for the outlook. So how the company guides. So there are two dimensions to this. So if a company has provided guidance for the current quarter and has said, I'm going to do $1 a share, for example, and they do $1.05, but the consensus was at $1.07, the stock is likely to sell off a little bit or may see some softness. It may not react positively, even though relative to their guidance, they beat by 5%, but that was already well understood by the market. This is what the power of consensus is. And that also applies to the guidance. So coming into the quarter, the company announces, and then they are going to announce what they expect possibly for next quarter or for the full year. There's also going to be a consensus estimate coming into the quarter for that. So for, say, the next quarter, there's already an expectation that the company is going to be doing, say, $1.05. And the company comes out and says, well, actually, we're going to do $1.15. And so that is going to be much better than was actually expected by the market. So that can actually serve as a positive catalyst. So there are different dynamics happening that can have an impact on the company's stock price that are directly related to what the estimates are, how they have met or beaten the existing guidance, and what the guidance is going to do next.
Right. So it's a really tricky role to play, kind of getting your arms around has the market already priced in and how am I guiding that messaging for my company?
It can really help the IR professional understand and communicate with their senior management team. Okay, this is what the market is actually pricing in. This is maybe what we want to communicate. This is how we want to be putting ourselves out there in the market and what sort of expectation we want to set. Then it kind of evolves from there.
It's a tough role. And I think the more I understand what investor relation groups do and the many hats that they wear, the more sympathetic I am to that role. So thinking about, we were talking a little bit about messaging and communication for the investment community. How important would you say it would be to customize that communication and messaging for the different investor types?
It's very important. There are a lot of different types of investors out there. And I would say that different investors are going to be focused on different types of fundamentals. I have a bias towards being a growth investor, so I'm very interested in companies and parts of the business model that are accelerating. So seeing accelerating revenues and segments within revenues, seeing companies that are seeing an acceleration in earnings growth, for example. These have a tendency to be more on the growth side. Value investors are going to be different. They're going to have a different set of fundamentals that they're going to be focused on. So the line of questioning may be quite different, as will income investing. Companies will be a lot more focused on dividends, for example. So there's different approaches that different investors may emphasize in an IR discourse.
Mm-hmm. And are there any sort of trends that you're seeing in that space that kind of helps groups understand how the communication may need to be different for those different investor types? Are there any tools or like kind of tips or anything out there that could help IR groups kind of understand varied messaging is important, but like how do I communicate differently with these different investment groups?
Yeah, it's definitely tricky. I feel like the whole landscape is really evolving. And the reason for that evolution is a number of different factors. One is that there's a technology backdrop that is moving and changing very quickly. And so how our professionals will be able to integrate different types of tools and technology and data into their process is going to change over the next couple of years, especially as we think about the impact of generative AI on enterprises. The regulatory environment is changing as well. So that can also have an impact on the way that different dimensions of the investment process are communicated and disclosed. The other piece of this is just the broad macro landscape and what types of companies are also appealing and can also bring in different types of questions and different types of data that may actually be new to the investment process.
Yeah, the big question mark I think I encounter a lot with my conversations with investor relation professionals is around AI and how AI is sometimes perceived as a threat, but you can flip it on its head and say, actually, AI can actually help you a lot with how you're doing things. But in the short term, it seems like very intrusive, right? It's dominating a lot of conversations, but there's still a lot of unknowns of how it's going to be used and integrated in all sorts of workflows, and that's specific to just IR too. And so that's always interesting to hear, especially you cover the TMT industry, how AI may be playing out and impacting these different workflows. We talked a little bit about all these different messaging that all these different investor groups, all this different kind of messaging that you have in this relationship managing. But in your experience, how can companies, thinking about the flip side of that, how can companies ensure that their messaging is actually consistent across different platforms and consistent with those interactions with brokers and the varied investor types?
And they need to know what the data is that is being input into models and what those assumptions are and how that data rolls up into other tools that are used by the investment community, whether it's our platform or another tool or service. It is important for the IR professional to understand, okay, what is actually baked into that consensus number and why, and be able to articulate that and communicate with the investment community about what they're actually seeing in terms of their own fundamentals, what their guidance is, and what their strategy and outlook are.
Yeah, I love that answer. It all goes back to the data, y'all. I feel like I talk about that in many episodes that I have. Is just, again, going back to the fundamentals and the data that underpins your decision making. Thank you, Melissa. I really enjoyed this conversation. I typically like to close out the podcast with just like one soundbite of actionable advice for our listeners. So I like to pose that to you. Like, what is one piece of advice that you would give IR groups?
Understand what is baked into consensus, because as the company guides and thinks about its future outlook, it's important to see what's already been priced into the stock and how that may or may not have an impact on the stock's behavior after that's been released.
As I suspected, it goes back to the data. Yay for data. But thank you, listeners, and thank you to our special guest today, Melissa Otto. I hope you enjoyed this content. And as always, let me know if there are topics you'd like me to cover. Until next time, happy listening. Thank you.